How's it going, everyone? Welcome back to another dividend investing video. So on the last Monday of each month, that is my day to beef up my exposure to real estate investment trusts in my Roth IRA. Today, I'm going to share the REIT I bought, why I bought it, why I think it belongs on your watch list. Guys, I'm all about collecting rent checks, but I have no desire to be a landlord, so this gives us the best of both worlds by investing in real estate investment trusts. It's real estate and dividends. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So I won't keep you in suspense. The REIT I purchased this morning is CubeSmart, ticker CUBE. Cube. I first opened a position back in September of 2022 due to the stored capital going private. CubeSmart is in the self-storage subsector in real estate. They are a self-administered and self-managed real estate company focused on the ownership, operation, acquisition, and development of self-storage facilities in the United States. Self-storage is probably my favorite subsector in real estate. It's very easy to understand the business model. Customers require storage space for their stuff, their belongings, and companies like CubeSmart provide these storage solutions the customers require with over 1,300 facilities across the United States. These guys are growing and growing with a quickness. I've seen them sprout up very fast in my own area in the last 5 years. I mean, just check out the sales growth. Over the last 12 months, they've done $1 billion in revenue. 10 years ago, they were making less than a third of that, $320 million in 2013. Now today, they're sitting at a $10 billion market cap, just barely making them a large cap. And with the coming merger of Life Storage and Extra Space Storage, CubeSmart will now be the third largest self-storage REIT. And it wouldn't shock me to see further consolidation in the sector in the coming years. Long-term, CubeSmart has been a winner. Over the last 5 years, shares are up 66%, versus the S&P 500's 54.81%. And over the last 10 years, shares are up 184% versus the S&P 500's 165%. But this is only price return. Let me show you the total return once you factor in dividends. And this is why I like buying stocks that focus on heavy dividend growth like CubeSmart does. We got a 10-year total return of 307% versus the S&P 500's total return of 222%. That's pretty amazing. If you're only looking at price, I mean, you're up 184%, which beats the market. But in reality, you'd be sitting on over 300% returns if you held for the last decade. 120% of that you've already locked in as it was paid out in dividends. This means if you've held on to shares you purchased 10 years ago, you'd have already collected enough dividends to exceed your initial investment amount. Think about that for a second. That's why we do this long term. Every single dividend you collect at that point is gravy. I mean, pretty awesome. Now here I have the big four self-storage companies here in the peer section of Seeking Alpha, which, by the way, folks, you can help support the channel by using the link in the description that will give you a 7-day free trial of Seeking Alpha Premium. And if you decide you'd like to keep the service, you'd only pay $99 for your first year. Again, you have to use the link in the description to get that deal. And thank you to Seeking Alpha for making this available to our viewers. It's a great deal. Now, over the last year, these companies are all down, but Life Storage and CubeSmart are not quite as beat down, and that's due to them coming back up here in 2023. Life Storage is up nearly 40% year to date due to the Extra Space Storage acquisition deal that is in place. And CubeSmart also went up a good ways at 17%. So yeah, I'm buying into a stock that I am up on. I didn't lower my cost basis today, but I don't think they're overvalued at the moment, and CubeSmart still has a lot of growth potential over the next decade from what I can tell. If I was to buy another one of these companies, it would definitely be Extra Space Storage. They also look appealing right now. Let's compare the dividend stats. I'll show you why. As a dividend growth investor, I like CubeSmart and I like Extra Space Storage. Both companies have 12 years of dividend growth. They're both paying almost the same exact yield. Payout ratios here in Seeking Alpha are not worthwhile. I wish they would fix this when they're showing REITs, because with REITs, we want to see them using adjusted funds from operations. And I'll show you that data from Simply Safe Dividends shortly here. Now, what I love about these companies is you're combining that nice 4% yield with double-digit dividend growth. The CubeSmart, Extra Space Storage, these are both very similar, and I think you could make a case for either or both. CubeSmart just happens to be the one that I'm building a position in. I think the growth potential there is, it's a great opportunity from what I can tell. All right, so the actual payout ratio for adjusted funds from operations is 75% of forward AFFO. Now, AFFO, think of this as similar to free cash flow for REITs. Now, 75%, you'd think that's pretty high for most companies for a payout ratio, but REITs are different. They pay out 90% of their profits in dividends as a matter of policy. So 75% is low for this type of company. And Extra Space Storage, if you're curious, is at 79%. So again, extremely similar metrics by most metrics for this company. Extra Space Storage is just a bigger company. I think CubeSmart has more growth potential ahead of it. It also more likely to be an acquisition target by Extra Space Storage or Public Storage here in the next few years. I think that's entirely possible. And that's part of my investment thesis as well. It's entirely possible I complement my position with a few shares with Extra Space Storage before the year is over, assuming the valuation looks compelling enough. And as far as the valuation goes, we want to look at the forward price to adjusted funds from operations. And today, CubeSmart is sitting at a P to AFFO of 17.8. This is about 10.5% below its 5-year average as a discount. And I mentioned this was a better opportunity when I first started buying it 7 months ago, but I think it's still pretty good here, especially if you're long-term minded, which if you're watching my videos, that's likely what you are, right? Buying at this level, I'd say prepare to also buy lower because that opportunity is likely to come. I'm hoping it does. I buy REITs every month and I want to continue building this one up. I think if it started to get below 4%, that's probably where I would just be in the hold. Now, the dividend yield of 4.23% is 7% higher than the 5-year average. And I'd love to see this back at 4.5%, but my own purchase today, my yield on cost is still at 4.6%. Yield on cost is one of my favorite metrics to track. You're basically saying how much of your initial investment are you getting back in dividend. And Cube pays out their non-qualified dividend quarterly in the months of January, April, July, and October in the amount of 49 cents per share for a total annual payout of $1.96. When I say non-qualified, understand what this means. It means your dividends will be taxed at your own ordinary income rate, not at your capital gains and qualified dividend rate. And this is one reason I'm putting my Cube shares in my Roth. It's just one nice way to minimize the tax damage we happen to sustain as dividend investors. Simply Safe Dividends gives CubeSmart a dividend safety score of 61, considering it safe on the lower side. But with their growth and their dividend being well covered, I am happy with my investment here. Now, we have an average analyst price target of $52, representing about 12% upside from where we are today. So the future looking bright for CubeSmart and the self-storage business in general. Self-storage does well regardless of economic conditions, right? People's need for stuff ensures companies like CubeSmart, Extra Space Storage, Public Storage, they'll be collecting rents and paying those rents back to investors like us in the form of dividends. So buying into CubeSmart gives me a piece of those rents without any hassles of dealing with tenants, and I find that quite appealing, really. Very easy to understand how they're making money. I'm all about investing in business models that are easy to understand. If I don't understand how they make money, I don't buy it. I think that's a good rule to follow. All right, so let's move over to my Roth IRA investing spreadsheet. I'm going to punch in my investment right here. I bought 6 shares this morning for a total of $275.51. And what you don't see here are my purchases from 2022. So my actual position is more like 24, 25 shares. And that bumped our forward income up by almost $12. Nice to see. I also made my weekly SCHD purchase, the 17th share for the 17th week of 2023. I'm doing that 52-week investing challenge of SCHD. We started out the year at $76, $77 range. Now we're in the $73 range. And my cost basis is right between there, and that's how we dollar cost average. And if you've been following this series, you know I maxed out my Roth by adding $125 every single week into this account. The accounts of Charles Schwab. 125 times 52 is exactly $6,500, and that is the annual limit for those of us under 50 who contribute to a retirement account. I still have a little bit of cash left over, and I am expecting my Altria dividends later in this week. And so that's going to give me enough to definitely get another share of CubeSmart. And I could do that, or I might just leave that money for my May purchases. But I'll definitely make sure I update you guys on what I do at that time. Okay. So in the 17 weeks of investing in this Roth for 2023, we just added over $88 in forward income this year, and that's going to cross $100 next month in May. So there's an update on where that stands for those of you who have been following along. And leave a comment below if you have been buying any REITs, or if you're on an SCHD challenge or plan like I'm doing here. Love to hear your thoughts, your ideas, and we'll end the video here. A quicker video. I want to make you guys aware of the purchase I made today after I made it. More to come in the next week. I'll have a video highlighting my favorite dividend stocks for the month of May. I'm also going to get a video out this next weekend on the progress of our public Fidelity account, the dividend growth income portfolio. Things are moving along nicely in that account as well. I also got a lot of feedback from you guys saying you wanted to go more into the Canadian banks, so I'm working on something there. I'm also working on another SCHD video. We're going to dive into the top 10 and see which ones we might want to purchase today or at that kind of level, Have a wonderful day, folks, and until next time, keep investing.